Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 16th of August, 2016. Ooh, lots of news chatter. Thanks for joining me. This is another Trader Bite. It is Tuesday, the most active day of the week statistically. This is early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Looking at the news overnight, overall, we're looking at several things. One that is key is the Japanese yen pushing um, uh, pushing to be on track for its highest close since November 2013. It's over $100 at $107 or so, $100.07 or so on heavy buying. Also, the UK inflation rose faster than expected. Germany's ZOO figure came out. Investor confidence rose to zero point 0.5 in August, up from negative 6.8 print that was recorded shortly after the UK vote to leave the European Union. So overall, that looks like what is driving the markets. Of course, yesterday you probably, and I'll show you my index chart of various products. Yesterday there was discussion that Saudi Arabia and Russia were in talks about potentially setting a meeting to talk about production and stabilizing the price of crude oil. So we saw it rally, and Iran has recently, or over the last day or so, has said that they may be able to participate in those meetings. They're not sure yet. So that's how things are shaping up. As far as what's on deck for today, we already got the CPI, the ZOO for the UK and Germany and Europe. We got CPI this morning for the US. The CPI came in at 0% versus 0% expected. Ex food and energy came in light at 0.1% versus 0.2%. But the July housing starts showed a strong push, strong growth, 1.211 million. Housing starts versus 1.18 million. Expected building permits were actually lower at 1.152 million versus 1.16. We saw a reaction in the treasuries. I will be covering the notes again to continue the theme of looking at where money's going. And then, of course, we got comments from Fed Dudley this morning. He's a dove getting closer to a time for a rate hike. September hike is possible. Basically, you might as well just sleep in. That's not very useful information, but there he is. He just released his comments. So, other than that, we're looking for Fed's Lockhart at 11:30 Central, 12:30 Eastern. He's a non-voter, middle. Speaking at the Rotary Club in Knoxville, and then we have a 4-week bill auction at 3:30 Central, 4:30 Eastern. That's what's on deck for today. Let's take a quick look at what we expected yesterday as part of our usual routine, daily routine. Except I'm going to start today with what I discussed about the notes. As you can see here, the notes we're expected to have a small pullback and then push into the gap zone. Just by contrast, by way of contrast, I wanted to show what actually happened. Here are the notes. This was yesterday, so if I shift this forward, we can look at what it did yesterday. So again, this is what was expected. When the Trader Bite was going on, this is what actually happened. So we still had that drop, pullback, and push into the gap zone. That took a lot of patience for those who are trading the notes to sit through the zipper here and a final break. It was just really, it took quite a bit of time to get through. I know a couple of people got on that within the S5 chat forum. But it's an interesting thing to watch because the Treasuries, are a fundamental based product. We had a gap zone this morning, and we ended up clearing that gap zone once the CPI numbers came out, which is about right here. We filled in this gap zone that we created with a nice rotation down in the notes, and now the notes are shaping up to do the same thing again. Push up. We have a double bottom at 3206, 13206, a double bottom, and then it looks like the potential to finally close this gap zone from way back here and test the 132.02 for those who trade Treasury. So I just wanted to review that as part of what we looked at yesterday. But as far as the ES, here's what the key play that was expected. The ES, we were looking for the market to push up to the high, and then find sellers, new all-time high, find sellers near the 2187 measured move, and then return back to the prior day's high, and then find a base, and then potentially rotate up. That didn't happen at all. It was just a very, very dull trade yesterday. 6.25 points in the ES yesterday. Someone in the S5 chat room released a study that showed that on Mondays the most common range is 9 points, and the first standard deviation, what we would consider to be normal, or 70% of the population, the sample set in the ES for Monday, is between 5 and 19 points. Quite a range, but we were definitely lower than the most common range yesterday. So the other idea was to open and chop, basically an open auction in range, and then inability to push through, and then start to rotate down to 2177.25. That didn't happen at all. So neither hypo 1 nor hypo 2. The actual hypo that worked out in yesterday's trading here, as we look at it, this was yesterday right here. It was hypo 4 to open in strength and somewhat of a drive. I issued a caution of shorts first thing as soon as the market opened yesterday because we were unable to make a proper test down. The normal behavior of an auction is to open in a out of range, try both sides, and then usually it makes an attempt at the prior day's range at least before buyers step in. For example, if you're a buyer and you're staking funds, you would want to see if anybody's interested in selling it back in the range before you step in, and that's the money on the sideline that drives the market very often. So it pushed up immediately, and then it rotated down on the close. Very odd shape profile yesterday. This is kind of we talk about P and B shape profiles, but this is an F shape profile for an F quality day yesterday. So just two distributions. The market put in a very heavy high volume node at the top and was unable to follow through. In fact, it put in this high volume node way back here, and then it one-ticked it twice. So you could see a little bit of volume at the top there before it started to roll over, and it basically ran out of time. But it looked like it would push down, pull back, potentially to the mid, as we often see for a test of 2183. And in this morning, it is definitely lower. As you can see, it's trading 2181.75 currently. So yesterday, not much to talk about. Pretty dull trade, but overall we can't even move our profile forward, our composite forward. We will likely be able to today with it trading back inside of the micro composite. We may have to envelop or encompass yesterday's range, and I believe yesterday's volume was in line. Oh, can't read it. Yesterday's volume was actually in line with what we would consider to be normal. Actually, it was a little light, 949,000 versus 1.05 million, a little light on the volume. Again, new all-time highs. The market's now rotating down, and the market has been rotating down the day after new all-time highs for quite some time now. So it's following that usual pattern that we see. If we look at the big picture, here's what we have, and this is a really odd thing that we're doing. So we've pushed all-time highs right here. So we've pushed through the old all-time highs right up here, and we have essentially not retested. Generally, what happens is we push all-time highs, and we actually don't even go that high. We usually end up pushing all-time highs just by a little bit, and then what we do is we often test this the last point of control, the last high volume node, and then we start to walk our way up in a grindy fashion. What this has done is it's pushed the all-time high and created this composite low volume node all across the range here, which is just unusual. And then we've been stuck up here for a good part of July, and we saw just some of the toughest, choppiest trading we've seen in a while through July, and with a couple of gap zones below us. We have a few gap zones to contend with, and and what we have here is a market that doesn't have a very strong base. So I would expect that at some point we're gonna likely here to start pushing into this low volume node, and when that happens, we're going to see a pocket of air. We're likely to see a pocket of air that pushes us through down through to the 2110.75, which is the former high. This Friday is the third Friday of the month of August, options expiration, and then a month from this Friday, we have quad witching, right? So we have about 5 weeks until this contract expires. It'll be interesting to see if it holds on to these metrics, or the way it's pushing here through expiration on this product. I hope not. But this is what we have. We've pushed through and we have gone sideways. Okay, we had a small drop to 2141 and a half, and then immediately we pushed up, and guess what we did again? Sideways. And if you look at these boxes are also represented on my charts with microcomposites. That's what they are. They're just little flags, compression zones. And then yesterday was a what's called a gravestone or graveyard doji, I think, if I remember from my Nison's candlestick book. I believe it's called a graveyard doji or a gravestone doji. And that's what we have here yesterday. It came almost all the way back to the open with a big tail on top, and then this morning it is rotating down. That's the big picture. The immediate picture in the overnight, so you could see the strong pop up here on the zoo number right here. A pretty strong pop up on the zoo, the UK numbers as well, and then the market has just drifted down. An impulsive move up on news, revisit of the scene of the crime right there. That's a classic pullback after the impulsive move down and a continuation move, and this looks complete for now. And then what we have on the overnight is we have the mid of the session, the overnight session at 83.5. We have above us, we have the point of control, which is a kind of a two-pronged point of control again above us as well. And so there's, in my opinion, there's a pretty good chance here that a test of 84.50, the first test of 84.50 after the open, is likely to see a seller response. So I'm going to be looking for that once we get going here. So the overnight session's not showing us a very clean balance. The volume overnight is pretty close to what we would consider to be normal or expected, 190,000 versus 220 or so. So fairly active overnight session. But overall, the theme overnight, you see it opened up here. This the dotted green line is the open for the session. The theme has been downwards with a pop and then downwards again. So overall, just selling throughout the overnight session. Risk capital, we want to track the movement of risk. Risk capital is moving towards safety overall. The Japanese yen dominating what I track, up 1%. The euro is behind it at 0.71%. The euro is trading at 112.75. The British pound. Then we have crude oil, gold, the bonds, the U.S. bonds and a bund with the U.S. Treasury just below flat. And then the risk instruments, the NASDAQ and so on, the indices are all negative. So we have a flight to safety somewhat. I want to expand this chart for a second before we get into our hypotheses. Those of you who haven't seen this before probably recognize this to be the it looks like spaghetti, but these are not averages. This is basically a chart that is tracking in 15-second increments on a line chart all the different products that I track. Okay, so you have the U.S. Treasury bond down here, and the Treasury bond was weak most of the session. They all start at zero on the open of Wall Street, and if you look at what oil has done, is it popped on the open, came back to 0%, and then it just never looked back, and there it is. And you could see that the Russell was leading most of the session with transports. The transports are orange. The Russell was leading with crude oil, so I was getting new high alerts on the Russell and crude oil through most of the session. And then all of a sudden, the Russell went flat, the Treasury started selling off, and then things started to roll over with everything else. But the Treasuries yesterday, the bonds were just getting lower and lower and lower all day yesterday. And part of that, as someone has pointed out in the S5 forum, that part of this could be maturities, money going out, and is potentially being put in the yen, and that's causing that imbalance. I'm not really sure. I'm not an economist, but that's how things are looking. As far as what we should expect, what I'm expecting for today, hate using the word should. We're looking at an open back in the composite. We are back in the meat of this profile with a day with a gap zone above us, and so the expectation this morning is for an open auction out of range, in balance, and then I'm looking for a test to 84.50, and I'm looking for resistance to 84.50, and a push to 21.77 and a quarter will be the next natural thing if we do get a seller in the 21.84.50. So today gives us a bit of an opportunity that is a little more clear cut than what we've seen here recently, because if it does push to 21.84.50 and then starts getting into the prior day's range, in other words, starts pushing through 21.84.50 and then climbing towards the yesterday's value, then we know we're wrong. So our risk on that trade is approximately 2 points. But if it fails at 21.84.50, then there's a high probability that we test 21.77. That's a 7-point rotation for 2 points, 2.5 points of risk. That's a decent bet in my opinion. That's expected to be hypo 1. That is the normal behavior that we would expect in this situation, back and balance. That's the context that supports that situation. Again, that is not a trade recommendation. It's just the way I'm looking at things. The opposite hypothesis, if the auction opens and pushes lower into the overnight low, and is unable to push through 21.79 and drive towards 21.77 and a quarter and starts to pull up, then we're likely to get a resistance on the first touch at 2184.50, but caution as it tries to push into the prior day's range as buyers see these prices lower than what they were, and therefore a relative small bargain for buy programs to kick in. And the buy programs have been pretty dominant lately, and that's the second hypothesis. That's the secondary plan. The tertiary plan is a drive towards 2184.50, potential to push through if it's driving right off the open. So the 2184.50 is a decent area to look at, but if it drives there right off the open, that I'm looking for it to push through by a little bit. I'm looking for a rotation down, and then I'm looking for re-entry into yesterday's range, and I'm looking for 2189.50 if that happens. So if it drives, do not try to get short. What we want to see is, and that's why I announced the opening types on Twitter and in the S5 forum every day. The opening type gives us an idea of the type of strength that's there, and in the opening swing gives us an idea of where that initial strength fizzled out in both directions. That's why the opening swing does not have a time constraint. Anyway, I'm way over my time going into this much detail, but this is an interesting setup here today. That's hypo 3. If we open and drive, then caution shorts. We're likely to get a pullback and a push through, and then the target will be 2189.50 in that scenario. So that's how things are shaping up. I'm sure that a lot of you are confused. Just hang in there. This stuff becomes clearer over time. You'll see the same repetitive stuff going on. I did a webinar on habits last week, and this is what you're seeing here, just habits unfolding, constantly repeating every day, because we want to commit what we're doing to the subconscious as much as possible as traders. As traders, we do not want to trade with our conscious mind while we're trading. We want to do all that before the market opens. Once the market opens, we want to be in auto drive, just executing the plan. That's the goal. Good luck today, and I'll catch you tomorrow. Take care.